For all your real estate, financing, and investing questions, call the show's off-air number and speak with Mike Gray directly. 530-431-8586. That's 530-431-8586. Now, the Golden State Report with Mike, Amy, and Dave.
Welcome back, everybody. You are listening to the Golden State Report, heard every weekend on AM 1380. I'm Mike Gray with Morris Williams Realty, along with David Stone from the Sierra Consulting Group.
Great to be with you guys.
And Amy DeBusk from American Pacific Mortgage.
Hello, gentlemen.
And so just to kind of continue from our last segment, all right, so we are in a quiet market, but interest rates have kind of come down just a bit, Amy.
Absolutely. The market is already factoring in the upcoming predicted Fed funds drop in rates. So, they're already, we're
anticipating
it. And the market already is seeing it. So that means that interest rates have already come down. We're in the mid-sixes right now. By the end of the year, I predict that we could see a 5. I might be able to offer somebody, high 5s by the end of the year.
So Christmas in the 5s.
Christmas in the 5s.
Okay.
From your lips to God's ears. So anyway, but we were talking on the break about the squeeze and what's going to happen. I'm calling it the squeeze. Maybe that's not what it is. But I think that what will happen, and Mike agrees, we're going to have a tsunami of sellers that are like, okay, we're in the 5s. The difference between 3.5% and 5.5% is not that big of a deal when you amortize it over 30 years. And we are busting at the seams in our house. We need to sell. We need a bigger house, period.
Yep.
Yeah.
Like, that's happened. That's going to happen.
I mean, the reasons that people sell have really nothing to do with interest rates. Now, the interest rates have people...
Until recently.
You sell because of a job relocation, upsize, downsize, change in the family, a divorce, a death.
Yeah.
None of those have anything to do with interest rates. But having a low interest rate has delayed the selling. And that delay is going to create kind of we have a dam here, and there's more and more water, more and more homes behind it. And I agree with you, Amy. If interest rates would drop below 5.5, a lot of those sellers are going to say, now I'll downsize. Now I'll upsize.
Yeah.
And now, I have 2 clients, 2 situations where they have gone through a divorce, but they're still living together.
Oh, my gosh. Are you serious?
I'm serious. I am serious.
Wow.
And it's because it was cheaper to both of them to live.
It's cheaper to keep her?
Yeah. Well,
that's for sure.
No, it's just cheaper for them to live together.
Oh, come on, David. You've heard that term before.
And that's what I'm saying. That's for sure. I've been married for 37 years, and I love my wife.
All I'm saying is that relationship works until one of those 2 finds somebody else. Then that
situation is not going to work anymore.
I guarantee it.
Yeah.
But I do have clients who have gone through a divorce, and they have decided just for a time being, because of what the cost of everything is, that they're just going to share the same house.
Yeah, well, I have some interesting things happening in my business that haven't happened in many years. Over the last 2 weeks, I've had 6 clients reach out to me, referrals of, from different referral sources, and past clients that are investors that are looking to do some investing.
Interesting.
And that is interesting to me because the investors were really, really doing a lot of buying and selling back in 2016, 2017. But, kind of dried up when the housing market went crazy and, you're seeing those double-digit increases. That's not the environment investors like.
Yeah. Unless they already own the home and they love it.
Sure. But, doing fix and flips, even, building custom homes. So I was very encouraging to me because I do feel like the investors have a pulse on the market, and I do believe that they see what's coming.
Okay, so tell us what kind of programs that you actually offer.
Yeah. So I offer a program. It's a fix and flip program. It could be for experienced flippers. Could also be for a first-time flipper, where we will finance, the project.
From any limitations that you're offering there?
Yep, there are limitations. There's credit limitations, and so you have to have a minimum credit score of 680, and they'll finance up to 70%.
And it can be an individual or it can be an entity like an LLC or an S corp.
It has to be an entity. They only this investor only lends to LLCs or corporations.
Okay, all right.
But yeah, and we also have. I mean, very rarely do construction loans out there offer programs for builders, but we actually have a spec home loan as well for custom construction builders.
Interesting.
And then you also have, like, for example, if you are a homeowner and you own the land free and clear, you have a construction loan that works for that person.
Oh, yeah, absolutely. Yep. Specializing in custom construction loans for the owner. Yeah.
Yeah. You help them at different stages as they go through. And then that loan, does that loan, they have a whole new loan when they're done, or does it move into a...
Yeah, the one-time close hasn't quite come back yet.
Okay.
So it's a two-time close right now. So that means that we have a loan, throughout the phase where you're building the house, and then we do a takeout loan at the end.
Okay.
Which, you know what, when the interest rates are going down, a one-time close, that's a fancy way of, saying, ooh, there's less closing costs. But you know what, you're going to want to refinance at the end anyway, because the interest rates are going to be so low.
Okay, good.
Sure.
I want another question. I had a client call me just this morning asking me if a reverse mortgage was a good idea. And with interest rates sitting where they are right now, what's your take on that, Amy?
Well, I do a handful of reverse mortgages. Lately, I've done 2 in the last 6 months. So for the right person and for the right reasons, absolutely it works right now. Now, is it harder to get a reverse mortgage right now? Yes, because when you have higher interest rates on a reverse mortgage, it eats up a lot of your equity. So we're not able to offer you as high of LTVs.
Okay.
I'm sorry, I hate when people use acronyms. High of loan to values.
So how much?
Very well said.
So how much equity do you need in a home in today's market for a reverse mortgage to be a viable option?
For a purchase?
No, just like I say,
reverse mortgage.
I own my house. And,
yeah.
But I do have a mortgage on it. I need to know how much equity I have to have for this to really make sense.
Well, I can give you the in general answer, but there's 2 factors that go into a reverse mortgage. It's the age of the youngest borrower, and it's how much equity they have in their home. So I would say that for somebody in their 60s, you need about 65%.
Okay, how about if you're older than dirt?
If you're older than dirt,
how much of a reduction in that need?
Probably what?
How much of the reduction in that need if you're older than dirt? Let's just say that older than dirt
is 75.
Boy,
that's not older than dirt.
That's a lot younger than I thought you'd say.
How about 90?
Okay, well, let's go 80 right now. 80. Okay, 80, all right?
Okay.
And if you're 80 years old, I am not saying that you're older than dirt. I have a kind of a qualifier there, okay? I apologize.
The max principal limit on a reverse mortgage, don't quote me on this, I will follow up with this, but I believe it's 57%.
Okay.
Yeah.
And then you can also buy with a reverse mortgage. Explain how that process works,
Reverse
Amy.
purchase, so it's just the same as if you were to get a forward mortgage. You're just borrowing with money that you don't have to pay back.
Yeah, so you do a down payment that's a sizable down payment in a reverse purchase.
Right. So if you're, again, let's use if you're 62, you're going to have to put down about 67%.
Okay. And if you're the older you get, the less you have to put down.
Correct.
Okay. And then is that interest rate higher than than the normal 30-year mortgage?
Yes, it is.
Okay.
Yep.
And so you'd always hope that you'd have an appreciation that would match that interest rate, because then all of a sudden you're treading water with the equity that you'd have in your home.
Yes. So there is a product through the HECM reverse mortgage program.
What's the HECM?
Backed by
What's HECM?
It is backed by the Federal Housing Administration. Okay, so it's our regular reverse mortgage, right? So there is one. It's the adjustable rate, that's where right now you'd kind of want an adjustable rate mortgage because interest rates are going to be coming down. Now with this program, they have it's another loan on top of the adjustable rate mortgage that you're financing, where you can it actually grows, the interest grows, so you actually build equity in this line of credit. I know I didn't explain that very well.
I'm still confused.
I'm going to start one more time.
Amy's looking at my eyes like, I don't understand that at all.
So you have a loan.
That's why you need Amy.
Oh my God, you guys. Yeah. You know what? How about this?
Have them call you.
If somebody has questions about a reverse mortgage that's an adjustable rate mortgage, give us a call.
That would be a lot better, all right?
Yeah.
And we have the number, which is 530-431-8586. Or you can go to our website, thegoldenestatereport.com. Or you can text that number, 530-431-8586. We'll be back right after this short break. Please stay tuned.
Greenland.